Well, hello and welcome. Thank you so much for being here on YouTube. Now, let's look at what we are seeing in the markets. Certainly some red over the last several days. We've broken this trend line, this upward trend line here, this short-term upward trend line. We've broken below that, and we're coming back down to this significant downward sloping trend line, which has been in play since January 2022. I said that's more than likely what we're going to see here. We're going to see the markets move down and test this support level again, or this downward trend line again. While we may get a little short-term bounce off that, I think ultimately we're going to continue to move down, right? The Federal Reserve, like we saw last week, Jerome Powell testified on Monday and Tuesday, and he said, look, we may need to be very aggressive with interest rate hikes moving forward. Recent data on inflation, employment, spending, and manufacturing shows that the economy is hotter than the Federal Reserve officials expected, and certainly the chairman expected. The next meeting is in 2 weeks. Are they going to raise rates by 0.5% now? They're seeing things continuing to heat up. There were some very good employment numbers that came out recently as well. That could encourage the Federal Reserve to continue to raise rates aggressively, and maybe at that 0.5%. But what's just happened recently is we've seen Silvergate, which is a sort of a cornerstone bank within the cryptocurrency market as far as lending goes. They've just collapsed, and also Silicon Valley Bank has collapsed as well after failing to raise capital. So, when you get the Federal Reserve raising rates from 0 to 5%, well, almost 5%, very rapidly like that, it's going to cause things to break, right? Newsflash, the Federal Reserve is very good at that, going too extreme in one direction for too long. They printed too much money, and this is what caused the inflation in the first place, okay? And then they told us, look, we've gone too far with money printing. That's caused inflation. But don't worry, it's just temporary. In fact, it's not temporary, it's transitory. In fact, it's not transitory, it's getting worse. In fact, it's getting a lot worse, right? So they just continue to go too far in either direction all the time, and that's exactly what they're going to do here. They're going to continue to raise rates until something breaks, like regional banks starting to collapse, right? Because what people do, because the banks haven't put into their risk assessment the fact that they're going to be paying 5 and 6%, right, as far as interest goes. And a lot of people, now that you're getting really good yields for bonds and looking at the yield you can get in a relatively safe environment with the government bonds there, people are piling out of banking products. There's even bank runs going on where people are taking their money out and putting it into safe havens like bonds, because they're getting a decent yield now. And this is causing some banks to collapse, right? This is a really, really big problem. And, there was a stunning bank run, which was very, very catastrophic here, and then caused the second largest failure of a financial institution in US history. So people were simply going there and just taking their money out. They weren't trusting this institution at all to safeguard their money, and that's ultimately what caused it to collapse. So it's a really big issue here. And while we had the Jerome Powell, the Federal Reserve Chairman, speaking last week and saying he's going to continue to raise rates because inflation is hotter than expected, the economy is hotter than expected, well, we're not going to have to wait long to find out the answer as to what inflation is doing, because on Tuesday we're going to find out. So it's all happening at once. Now they're looking for inflation to cool off down to 6%, right? Last time it went down from 6.5 to 6.4. If it is hotter than 6%, or certainly hotter than 6.4%, then you're going to see another big move down in the markets, right? So next week is probably going to be a big issue as well. So, we've got retail sales as well, we've got manufacturing coming out. There's a lot going on next week, consumer sentiment. So we could see more fireworks next week. And for me personally, I'm looking for a potential idea in gold. right? So the gold could be my potential idea. We've got a double bottom here, right? And I'm looking for it to move higher to come up to this gap level at about 30. So what we did last week, just so we can give you guys a bit of reference, we got into Hilton. Now, the trade was working really well, and then Jerome Powell came out and spoke about raising rates aggressively and inflation not under control, and obviously this stock went down with the overall market, right? So we had a losing trade there on Hilton. But what we also had was Tesla, right, that we got into. Now, Tesla had a beautiful move to the downside. It dropped about 25, 26 odd dollars from where we got in, and we had a huge winning trade there. So we had one loser on Hilton and one big winner on Tesla. The Tesla winner was just slightly more than the loser we had on Hilton, right? So that's what happened last week. Okay, it's part of trading, and when you're seeing, Jerome Powell coming out being as aggressive as that, continuing to raise rates, regional banks collapsing, that type of thing, you're going to see the markets move down. If we see inflation on Tuesday come out much higher than expected, you're going to see more selling. So we've got to be aware of that. So as far as what I'm looking for right now, I'm looking for a potential idea on GDX, because if you have a look at this, if you have a look firstly at gold, right? Look at gold first, the ETF that tracks gold, GLD. So you can see that had a nice pop, right? People flocking to a safe haven with banks collapsing, and the Federal Reserve Chairman saying things are a lot hotter than expected and inflation is not under control. People flocked into gold, and we can see it has a double bottom here. So gold has already had the move, or already started to have the move, up over 2%. And normally what you see is gold move first, then the miners next. So I think it's got the same pattern here, double bottom here, off a level of support. And I think what you're going to see, that gold starting to move higher here, probably up to the bottom of this gap at about 30. So with that in mind, I'm looking for a potential idea here on GDX, ETF that tracks the gold miners. One way you could do it, very conservative, is you could set a call debit spread where I'll sell the 28, buy the 26 call for $1.10 or $110 for one spread, one contract. Potential upside is 90. You could set this up as asymmetrical risk here by having your profit taker at the maximum value, which is $2, stop at 80, so only taking a small amount of risk here. So your risk would be $30 for one spread, potential upside is 90, 3-to-1 risk to reward, asymmetrical risk in your favor. So that's one way of doing it. The other way of doing it is by buying a call option in GDX, just simply buying a call. Now, if you bought a call, you've got to be careful about that, because obviously there's more risk when you're just buying an option, right? So you've got to be very conservative in what you do there, right? Very conservative with what you're doing. So for me, I would look at this and go, I don't want to pay any more than, in fact, let me look at this. I don't want to pay any more than 1% for time value. 1% of what? The stock price, or in this case, the ETF. So 1% of 27.50 is obviously 27 cents, right? So I don't want to pay any, or approximately, I don't want to pay any more than 27 cents for time value. So if I go down to the 22 strike call for the 21st of April, 2023 expiry, 41 days from now, I can see that the 22 strike call will cost me $5.47, which is right here, as you can see there, the midpoint, okay? So the reason I'm choosing that is because the intrinsic or real value is the difference between the price of the ETF, in this case, and the strike price, which is 22, which is obviously $5.20. So $5.20 is the intrinsic value, and only 27 cents is made up of time value. So that's sitting right on that 1%. Okay, I put my stop in at 347, so I'm only risking $200 for every one contract here, and I'm looking for this to obviously move higher, right? Bounce off the double bottom, bounce off the support level, go up and fill the gap. Inflation, banks collapsing, safe haven, all that type of thing. I think gold will do well, and I'm looking for this gold mining ETF to track what gold has just started to do as well, right? So that's a potential idea for this week. As far as last week goes, we had obviously the loser with Hilton and the big winner with Tesla. So that's what happened there. I hope you guys enjoyed that. Let's see what inflation is on Tuesday. And I think with those two trades ideas that I've got there, and also the other idea that I'm looking at as well is regional banks. I mean, it's had a huge fall. I mean, look at that move. Bit of a doji there. And if you have a look here at regional banks, just leave you with this idea. Right now, the RSI is under 7. So anything below 30 on the RSI is oversold. So it's significantly oversold. Bit of a doji. Got a gap here to fill. It could have a short-term move up, right? Because it's very, very oversold. Very oversold. It's like an elastic band. When it gets too oversold in one direction, RSI well below 30, in this case below 7, you're likely to get it to snap back. So that could be what's happening there. That's another potential idea that we're looking at as well, looking for it to get back up above 55. Yes, it's not good news right now with what's going on with regional banks, but I don't think the government's going to let them collapse. They're a huge part of the banking system, and also the Federal Reserve may ease off on raising rates. Rather not raising rates, I think they'll still raise them, but rather than 0.5, which I think they were going to do in 2 weeks' time, maybe 0.25 because of this collapse. I'm not sure, right? But that's just an idea. But I think that would bounce over the next several weeks from these levels. So that's another potential idea that we're looking at. Also, so I hope you guys found something useful in that overall market analysis, looking at what's going on with the Federal Reserve and news, and obviously the trades that we had on last week, and looking at a couple of new ideas for this week, and understanding how to choose the right option, right? Teaching you guys some stuff here, making sure you know how to choose the right option, being very conservative, going for 1% of time value when you're purchasing the option as part of the premium. All right, guys, hope you enjoyed that. I'll talk to you again next week. All the best, and bye for now.